Welcome to my new video, that is the fundamental analysis of stocks. Okay, so here we will be learning about the fundamental analysis which you have been learning. So in this part you will be learning about the price to cash flow ratio. Okay, so I might have told you about the different ratios until today. You have been learning about the different ratios, and I hope that you might have learned how to use the ratios. Okay, so you have the information available online which you can search for companies, price to cash, price to earning. You can find the different quarter results of the companies. Okay, when the companies generally tell their earnings and other thing, you can find using the formula. I'm giving you even the formulas so that you can calculate the different ratios. Okay, so now let's go to the next part, that is price to cash flow ratio. Okay, and why the cash flow ratio is important, what is it, you will be learning about all those. Okay, so now let's see what is price to cash flow ratio. Price to cash flow ratio, value of a stock price relative to its operating cash flow per share. Okay, so operating cash flow per share, what is it? Operating cash flow per share, operating cash flow means the cash that the company has and the cash that the company exchanges to do its activities. Okay, so every company has cash, right? They keep cash apart from its earnings, apart from everything. What is the total cash that the company is holding with them? And it is operating with the cash. Company exchanges the cash, there's many things, right? So what is the operating cash that the company is actually having is called the cash, operating cash flow. Okay, now value of a stock price relative to that operating cash flow per share is called the price to cash flow ratio. So you can use it by the formula. You can calculate it by using the stock price by the operating cash flow per share, or you can do market capitalization by the operating cash flow. So that is another formula. Okay, now let's go ahead and let's see the important points. Okay, so there are many important points to consider when you are using the price to cash flow ratio. What are these? So the price to cash flow ratio is a multiple that compare a company's market value to its operating cash flow or stock price per share to operating flow per share. Okay, so it is the company's market value to its operating cash flow. That is the, as I told you, market cap versus by the operating cash flow, or 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 its stock price per share. Okay, so its stock price per share to operating cash flow per share. So that is another. Its stock price by operating cash flow per share. So that is another thing. Now, it works well for companies that have large non-cash expenses such as depreciation. So it works well for companies that have large non-cash expenses. So companies whose expenses are not in cash, for such companies this is very important. It is useful because a companies whose expenses are not in cash, and generally most of the transaction happens online or whatever, so their cash expenses, they have the cash reserve. Okay, so that shows us the value of the company. How much the cash the company is holding gives us how important the company is. Now earnings can be maintained, manipulated than cash flow. So why cash flow is an important factor? I can manipulate the earnings. Okay, so earnings of my company. Imagine I have a company, okay, and I can tell the earnings as lie. I can show the wrong earnings. I can tell people that my earnings are good, or I can manipulate my earnings. But the cash flow cannot be manipulated because cash flow shows the flow of the cash in the company, right? So it cannot be manipulated. The earnings can be showed as high or less. So price to earnings ratio is a little bit weak there. But the cash flow, that is how the cash is flowing in the company, what is the pattern, what they are doing with the cash, that is difficult to manipulate. Because you cannot tell lie that where your cash went, right? How you are using the cash. So that's why price to cash flow ratio plays a very important role. Now let's go ahead. What is OCF? What is operating cash flow? From so long I have been telling you what is operating cash flow. I have told you the basic understanding, but let's read the definition. Operating cash flow is the amount, it is a measure of the amount generated by a company's normal business operations. So what is the amount that is generated by company's normal business operation? So whatever is the normally the company is doing operation, business operations, what is the amount generated by those shows the operating cash flow. It is a measure of the amount. Just like the earning is the total earning. But this shows the amount generated by company's normal business operation. So whatever business operation they're doing, what is the amount generated only through that? That is called the operating cash flow. It indicates if a company generates enough positive cash flow to maintain and grow its operations, or it may require external financing for capital expansion. It shows if the company generates enough positive cash flow. The cash flow is not negative. The company is not taking loans, or the company is not having any kind of loan basically. It shows the enough positive cash flow, what the cash the company is getting to maintain and grow its operation. So how the company is using the cash to grow its operations, or whether the company requires external financing, that is loan for capital expansion. So if the company has less cash flow, then it requires external financing. It requires money from other sources to grow its business. But if the company has good cash flow, if it has enough cash reserve, so basically if the company has good enough of cash flow, it can use it for business expansion, or it's to grow its operation. So that is what operating cash flow is, a measure of the amount generated by a company's normal business operations. It indicates if the company generates enough positive cash flow to maintain and grow its operations, or it may require, or whether it requires, okay, external financing for capital expansion, to expand its money, whether it requires external financing. Okay, so that is what is operating cash flow. So that's it. Thank you for watching the video. You learned what is operating cash flow, and you learned what is price to operating cash flow ratio. Okay, you studied the formula. You studied about different types of ratios. Let me just tell you one. So price to earnings ratio was one, price to book ratio was another, this is another. So there are different types of ratios. You just choose your favorite ones which you feel are important. Don't copy somebody else's strategy. Okay, so that is very important, whether you are doing intraday trading, there are so many technical indicators, or whether you are doing the long term investing. Don't just go for tips from other people, or just don't follow what others are using. Just follow your own strategy. Create your own strategy by using these tools, ratios, what I am telling you. Follow, create a few, use a few ratios, and use a combination of ratios basically. So that is the strategy. Strategy means using a combination of things and following what you like. So when I do intraday trading, I use different types of indicators. For example, I like the moving average crossover and the Bollinger Band, because the Bollinger Band shows me it helps me to keep the stop loss and the target. It shows me the range, and moving average shows me the direction in which it is crossing. Then I can choose. So that is basically intraday. I have created my own strategy. I use RSI indicator. So there are a few indicators which I use and create my strategy. I don't follow other strategy to gain the money. Same way, and for long term, I use a few ratios like price to earnings ratio, book ratio, and a few ratios are there which I use. So that is basically my strategy. What I feel are important ratios, I use them. So same way, you must use what you feel are important ratios for you. Whatever you feel is good according to you, use those ratios and create a strategy. Plan when to buy the share and when to sell it. What kind of ratio you must use. So I'm giving you the tools. You can go to my intraday trading course and follow the intraday trading. After learning the stock market basics, obviously you might be here after learning the basics. So if you haven't watched the intraday trading, you can go and watch the intraday trading if you are interested in intraday trading. So basically you will be learning about different indicators there. So you have to combine the tools. I give you the tools, but you need to combine them and create your strategy. Just don't follow me blindly. If you will have losses, you will have profits too. Loss and profit keeps fluctuating, but how you manage your loss is important. Everybody in the stock market has loss and profit, but how the people manage the loss is important. So if you manage the loss profit properly, you will be in profit. So that's it for today. Thank you very much for watching the video. Subscribe to the channel would be fantastic.